Welcome to PM Exchange. It's Tuesday, October 30th. I'm Remy Hokie. Today we're joined by Rudy Narvas, Senior Analyst at Forecast. Good afternoon, Rudy.
Good afternoon, Remy.
Thanks for coming on the show today.
Thanks for having me here.
Well, in New York afternoon trade, the major pairs are trading mostly flat ahead of the Fed rate announcement. The FOMC's meeting is underway in Washington, D.C. So tomorrow afternoon, how much do you expect the Fed to move, if at all?
Well, we expected the Fed to cut the discount rate and the Fed funds rate by 25 basis points to 4% for the Fed funds. But the thing is that this is a lot tougher call than it seems. Even though consensus is very much, and Fed funds probabilities are showing that 25 basis point rate cut, it's a lot tougher than it looks because the data outside of the housing market isn't as obvious for a rate cut. But other indicators which could impact the real economy, like tighter credit conditions, we're seeing higher credit spreads happening. We're seeing some other indicators of the mortgage market, like the ABX index and also MBX spreads, rise, suggesting that there is further problems down the road which could spill over into other markets. We're also seeing bad earnings from financial giants, too, which are also impacting the way that banks lend to one another and could restrict credit amongst borrowers, such as you or me, or Mabel or IBM or something like that. So, given all those factors, which haven't really translated into the real economy, it looks like the Fed may have to cut by 25 basis points. But there is an argument for not cutting, in that the 50 could buy them some time, but it can only buy them so much time before they have to ease again.
Well, let's move on to a euro-dollar, which almost touched another record high today, and it's now trading around 144.25. But given the negative dollar sentiment in the economy, we saw the Conference Board's consumer confidence fall, and also there was some price action based on this morning's Wall Street Journal article. So given underlying weakness in the U.S. economy, what price action do you see for euro-dollar ahead of the Fed?
Well, we don't think that the bears will have any chance at all. I mean, I think that you may see a run to 143.48, but any sustained trade below that is probably not going to be held. I think that the risks to the U.S. economy relative to what's going on in Europe right now are probably greater. And therefore, I think we could see maybe a test of 145.48 resistance eventually. But heading into the Fed, I think we should see trading within that range.
Well, Rudy, in today's session, we're seeing crude oil and gold down, and equities have been trading mixed throughout the session. But now that we've covered euro-dollar, if you could give us your levels for the U.S. currency against the majors of the Swissy and yen, as well as the sterling, which hit a 26-year high against the greenback. So going into tomorrow's session, what are your levels for the pairs?
Well, the currencies will tend to, sorry, let me start again. Well, we expect FX rates to trade in range prior to the FOMC. We're not going to see much action, despite the fact that we do see a lot of high-frequency important data coming out. We look at the sterling to trade anywhere between 205 and 207. Swissy will probably, the line in the sand is going to be 168. Yen anywhere from 113 to 116.65, and those are the levels.
Well, we talked about levels for the major currency pairs ahead of the Fed, but how do you see the dollar trading post-FOMC tomorrow afternoon, and do you expect to see a short-term correction for the greenback?
Well, of course, the post-FOMC action will depend on what the communique says. And, there's a lot of uncertainty what's going to happen, what the communique is going to say. And if everything happens like it did last time, I think that the risk is that it could be very well similar to the last communique. And therefore, you could have a muted reaction. Although, because we think the risks are farther to the downside than the Fed would, like us to believe for now, I think there's a risk that they could be a little bit more dovish, which is, bearish for the U.S. dollar. But at the same time, too, it all depends on what currencies to pounce on. And with oil prices a lot higher now, and the U.S. dollar weaker, you could see the impact of import price pass-through into core inflation, and the same thing too with gasoline prices. So there could be recognition of the Fed that these upside risks to inflation do exist, and if the markets do pounce on that and everything else stays the same, you could see a dollar short-term dollar strength. But we're not sure if that's guaranteed, and that's just a risk that I think that people should keep in mind.
Well, while we're on the topic of interest rates and central banks, let's move on to the commodity currencies of Aussie and Kiwi. If you could tell us what's weighing on the high-yielding commodity currencies and what traders need to factor in the short term for the Aussie and the Kiwi.
Well, for the Aussie and the Kiwi, I think that there's no reason to unwind your longs unless you're overstretched. The carry trade between Aussie yen and Kiwi yen still remains, the soup du jour of traders and grandmothers that are trading in Japan. And especially with the fact that Aussie and the Kiwi economies do show some upside inflationary risks, and their central banks have pointed this out many times. And given the fact that Japan is nowhere near cutting rates at this point, raising rates at this point, and the U.S. at the same time too is nowhere near raising rates either. It looks like these currencies with the uptick in commodity prices, continued uptick in commodity prices, still has further room to gain. Well, the only one not mentioned was dollar CAD. Dollar CAD, may receive some boost from the lack of M&A activity. Over the past past week, you saw some M&A activity which helped dollar CAD reach new lows, and that could dissipate. But then again, too, you have commodity prices which are still reaching new highs. Although, from our account, dollar CAD is still very undervalued.
Okay, and last but not least, post-FOMC, we have non-farm payrolls coming out on Friday. The next FOMC meeting will be on December 11th, so this means we'll have the October and November non-farm payrolls before the next rate announcement. So what event risks should FX traders be eyeing, and where do you see the most opportunities right now?
Well, now that we have actually two non-farm payrolls again, this should play into the fact that don't rely on one data release. This happened in August. Remember in August when we had the super soft payrolls, and then the market went crazy, and then it rebounded once again. And this comes to mind again that what the Fed always reminds us is don't rely on 1 month of data. Always look at trend. And that's what the Fed does. And if the Fed relied on high frequency data, the policy would be just completely erratic. I think that the risk is for December 11th is that we could see further rate cuts. I think not only do we have non-farm payrolls, but we have more housing numbers. Today we had the Case-Shiller Index. The Case-Shiller Index showed housing prices continue to fall, and they should continue to fall even more. And from our accounts, it could drop by 20% over the next 2 years, which could cause a huge disruption in the U.S. economy. And the Fed is fully aware of this because they've written many papers that actually did the same simulation as we did. So the thing to look out for is more housing data. That's the first sign of weakness because you're not going to see it as much in durable goods. You're not going to see it much in GDP. The employment report, should continue to show that, show moderate strength in employment growth. It's not going to be stellar. It's not going to be soft, largely because employment is somewhat of a lagging indicator of what's really going on in the economy, although still very, very important.
Okay, Rudy, thank you very much for coming on the show today.
Thanks for having me, Remy.
This has been your Forex News with Rudy Narvas from Forecast. Now we have your equities and commodities wrap up for the day. U.S. stocks ended today's session on a mixed note. The market awaits tomorrow's rate decision from the FOMC. Most investors expect to see a rate cut tomorrow, but there is still uncertainty over whether the Fed will deliver a quarter-point rate cut. On top of concerns over inflation, there is another drop in consumer confidence. The Conference Board's Consumer Confidence Index fell to 95.6 in October from a revised 99.5 in September and from the 105.6 reported in August. At the end of the session, the Dow Jones Industrial Average declined nearly 78 points to close at 13,792.47. The tech-heavy Nasdaq ended flat, down 0.73 at 2816.71. And the S&P 500 fell almost 10 points to close at 1,531. And over in the fixed income market, U.S. Treasuries were mostly flat ahead of the Fed's decision on interest rates. Bonds started out the session under pressure as there was uncertainty over the rate decision. The benchmark 10-year Treasury bond was unchanged with the yield at 4.383%. The 2-year note was flat, yielding 3.805%, and the 30-year bond was down with the yield at 4.675%. And in energy, NYMEX crude oil futures fell 3.4%, trading down for the first time in 5 sessions. Pemex resumed production at their oil facilities in Mexico, while a Goldman Sachs survey pointed to an increase in U.S. crude supplies. By session end, December crude ended down by $3.50 to $90.38 a barrel. The contract ended at a new record high of $93.53 a barrel in yesterday's session. Meanwhile, the Energy Department and the American Petroleum Institute will release separate data on U.S. energy supplies tomorrow morning at 10:30 a.m. Eastern Time. And in other NYMEX products, November RBOB gasoline fell 8.46 cents or 3.6% to close at $2.24.28 a gallon. November heating oil fell 4.86 cents or 1.9% to close at $2.418 a gallon. Meanwhile, December natural gas added 4.9 cents to $8.023 per million BTU. Over in the metals complex, gold futures ended down as traders await the rate decision from the Federal Reserve. Also, falling crude oil prices led traders to lock in gains. Today, December gold closed down by $4.80 at $787.80 an ounce. And December silver fell 10.20 cents to close at $14.328 an ounce. And December copper fell 3.95 cents and at $3.4815 a pound. Meanwhile, January platinum slipped $24.60 and at $1,440.90 an ounce, and December palladium fell $3.40 to close at $371.80 an ounce. This afternoon, we're joined by Bobby Firestone, analyst at Aileron Trading. He'll recap today's session in energy and metals futures and also give us a short-term commodities outlook.
Well, today the NYMEX threw a big bucket of ice water on top of the bulls. The rampant overly leveraged speculation that many people believe is going on in crude oil has been calmed down a little bit by the exchange increasing the margin requirements. Now, it's the second time they've actually done it. This is the first time it's actually had an effect on the way the market has moved. Now, we saw it gradually move down through the entire day, and then we saw a big sell-off of a little bit over $1.50 in the last hour or so of trading. So I know that's actually had an overriding effect of relative to any of the other news that's been in the market. Now, heading forward into tomorrow, obviously we have inventory reports. But on top of that, we also have to keep an eye out for what does the Fed do. Expectations are going around looking for a quarter-point rate cut. Is it going to happen? Probably. Do I think it's the right thing? Probably not. Now, I do say there is a chance that the Fed's not going to do anything. If that happens, we're going to see we should see the dollar get stronger, and we should see commodity prices all come off a little bit. We should see gold come down a bit. We should see crude continue today's downward action. But overall, I'm not too encouraged by that. We also may be looking at a situation where we're talking about buy the rumor or sell the fact. Everybody's expecting something out of the Fed. So even if they do it, we could see an easing here in many of these markets that have run rampant. Now, a little word of note: there's been a lot of coverage on the up day. Unleaded was up at a higher percentage, and today's down day, crude is down at a higher percentage. So we're starting to see that delta 2 start getting twisted, and we should expect to see more of that pass-through happen over the next few weeks, and expect to see that situation actually show up in the inventory numbers as we see refiners.
That was Bobby Firestone, analyst at Aileron Trading, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.